This simple EMA trading strategy had a win rate of over 80% in the backtest. I'll be showing you exactly how the strategy works and which indicators we will be using. The strategy uses a fixed set of rules to make sure that you will know exactly when to enter into a position, and if you'd like to become in the top 5% of daily traders, make sure you watch this video all the way to the end. Like, subscribe, and turn on those notifications so you don't miss out. Now without further ado, let's get into it. So you're going to need to head over to TradingView.com and add the indicators to the chart. I backtested this strategy on the Bitcoin 15-minute time frame, so let's first select our time frame. Now let's add our indicators to the chart by navigating to our indicator search tab and search for the secret EMA cloud, which is this one here by Teddy Kleps. Now let's take a look at how we will be using this indicator. It consists of 3 exponential moving averages. The red line is our 200 EMA, the white line is our 89 EMA, and then our green line is our 21 EMA. In between these moving averages, a color is plotted to create a cloud. The main use of the indicator is to identify the overall trend of the market. As you can see, whenever the market is in an uptrend, the lowest period moving average will be above our larger period moving averages. So in this case, the 21 EMA will be on the top, our 89 in the middle, and then followed by our 200, which is on the bottom. As you can see, by using the indicator this way, we can easily spot trends in the market. Whenever the market is in a downtrend, the opposite will be true. This means that the 21 EMA will be below our 89 EMA as well as our 200. As you can see, by using the indicator in this way, we can easily spot trends in the market. However, one secret use case of the indicator is usually forgotten. It also works as a consolidation filter. This means that the indicator can show us whenever the market is ranging or moving sideways. As you can see here, whenever the lines are not far apart, the market is usually ranging, and whenever the lines are starting to move far away from each other, causing for a larger gap between the lines, the market is trending. Now that you know exactly how we will be using this indicator, let's add the last indicator to the chart that will provide us with our entry signals. So head on over to your indicators tab again, and we will be searching for BX Trender, which is this one here by Quant Therapy. We will be using the BX Trender as the entry signal indicator. The 2 main parts of the indicator that we will be using for the strategy are this trend line and then our BX Trender line. The BX Trender line provides long and short signals. A long signal is given whenever a green dot appears on the line, and a short signal is given whenever a red dot appears on the line. Then the trend line works as confirmation for these signals. For a long signal to be valid, the trender line must be colored in green and above our 0 level. And for a short signal to be valid, the trender line will need to be colored in red and below our 0 level. Now that you know exactly how all indicators featured in this strategy work, let's take a look at when to enter into a position when we combine these indicators. So here are the rules for entering a buy position. Firstly, the EMA cloud will need to signal that we are in an uptrend. This means that the green 21 EMA is on top, followed by our white 89 EMA, and then our 200 red EMA is on the bottom. If this is the case, we will then be checking our price action, and we need for the candlestick to pull back into our 89 EMA. If we do get a close below the 89 EMA, but then do manage to reclaim it on the next couple of candlesticks, this will also count as a valid pullback. By doing this, we make sure that we don't enter into the position at a swing high. Now let's take a look at our BX Trender indicator. We will need for the BX Trender to provide a long signal. As you can see, this did happen here. To confirm that this long signal is valid, we need to take a look at our trend line, and if it is colored in green and above our 0 level, this confirms our entry. Before we do actually enter into the trade though, we do need to make sure that the price action is trading above our 21 EMA. As you can see, this is the case, meaning that all of our conditions have been met. So we can safely enter into a long position on the close of our trigger candlestick. We will be placing our stop loss at the most recent swing low, and for our take profit target, we're actually going to be waiting for the next bearish signal that appears on the BX trender. So as you can see here, we would have returned a 2.69 risk to reward ratio. Make sure that when exiting the position, the trade is profitable, otherwise we will not be exiting our trade. For sell positions, the following conditions will need to be met. First, we will need for the EMAs to indicate that the market is currently in a downtrend. This is the case if the 200 EMA is on top, followed by our white EMA, then our green. If this is the case, we will need for the price action to make a pullback into our 89 EMA. Once this happens, we'll be taking a look at our BX trender. We will need for the indicator to provide a short signal. Once the signal has been provided, we will need to check our trend line to see if it is positioned below our zero level. Lastly, before entering into the position, we will need to see that the price is trading below our 21 EMA. Which you can see we did just about close below it here. So we'll be entering into our short position on the close of our trigger candlestick, bringing our stop loss just up above our most recent swing high. And for the take profit target, we will wait for our BX trender to give a long signal before exiting our trade. We see here that a bullish signal was printed, but since exiting here would not be profitable, we will wait for the next bullish signal or for our stop loss to be hit. As you can see here, you could have exited the trade there for a small profit. You would have got about a 0.63 risk to reward ratio. But if we do just let this play out, see if we do continue in the downtrend and take profit at another bullish signal. And if you had have let the trade play out, you could have returned nearly a 3 risk to reward ratio. Okay traders, I hope you have understood this strategy. Let's now take a look at the backtest to see the metrics behind it. Okay, so we finally finished our backtesting, and those 100 setups were found within 3 months. We started our account with $1,000 and we were risking 2% for each trade. We see our win rate is crazy good. It's sitting at around 78%, and we managed to make 522% profit on our account. So yeah traders, overall I would say that this strategy is definitely viable. Backtest it and forward test it with paper money before trading it live. If you have any questions, please ask them down in the comment section below. If you enjoyed, please leave a like, subscribe and turn on those notifications so you don't miss out. I love you all. Peace.